Good evening, ladies and gentlemen. This is Chumputech Group First Quarter 2023 Analyst presentation. My name is Peter. I'm your host today. As usual, our Group CEO Rohit Nambia and few members from the senior management team will go through the presentation. Please keep your line muted during the presentation. So with that, I'm going to pass the floor to Rohit.
Hello everyone. Thank you for taking time on an evening. I hope to keep it short and to the point. So I think the key message is, if I were to summarize it, I would say 3 points. We recorded back-to-back profitable quarters. We kept telling you it's coming. So we've had 2 profitable quarters, and we see the momentum building. We've had a 30% growth in net earned premium, and we've had an 80% growth in number of customers. And all our customer vectors have improved, notably policy per customer, product per customer, and tenure of the customer, which all of this adds up to a good, future stacking up. Let's move to the numbers. As always, we'll follow the same template, which we've been following for the last 9 quarters. We had 8 commitments. This is the last year of our 3-year strategic plan. The team is working unbelievably hard to deliver, and we're making a final push so that we can deliver on 8 of our promises. From where I am, I see us making good progress on all the 8 promises. And I'm going to now give you an update at the promise level. Our overall net retention in the group is at 80%, so it's well above the 70% we had committed. Our preferred segments, health and lifestyle, we've seen a much higher retention ratio, as you have seen, with 98% and 86% respectively. SME has declined, but partly the reason is because there are some accounts where we've ceded more as we are still learning the business, notably products like cyber insurance as an example. On the commercial side, as always mentioned, we continue our exit. It's even faster than planned. We are continuing to make a full exit, and that's why you will see this reduce even further. In terms of net written premium, you may see a decline, but the decline is also primarily, as I said, because last year we had the Tenang scheme, but this year our business is more straight line, which means we don't have that one big kicker. We are seeing more sustained momentum. Nevertheless, we are seeing very strong growth on health, AA travel, and also motor. And notably, our first quarter travel premiums are 92% of pre-COVID levels. This is with AA probably being about 70%, 65 to 70% of pre-COVID levels. Just today, a very big thing as well. Today we have implemented a price increase on travel premiums in Malaysia, Thailand, and one more country. We've implemented it with a 10% increase on international routes and 5% increase on domestic routes. So that should also help both the top line and the bottom line. Moving on, digital partnerships continues to be vital for us. We are executing quite a few number of new partnerships thanks to the CEOs and as well as the partnership team. We've gone live with Kuala, with Bike and CriticSafe. We are in integration stage with Fatberry, MediSavers, and also MyDocLab. We are very proud to announce that we are partnering with Aon through the Boltec partnership, where we are offering a comprehensive protection program combining device insurance and support services for all mobile devices and home appliances. We are also protecting Samsung phones. We are protecting Huawei, Apple, Unify. The next time you buy a Samsung phone, you can check who the device protection is from, so you'll be proud to know it's your company that is insuring the product. We are partnering with Senang for personal cyber. We also are continuing to increase our B2C campaigns. We are seeing our website traffic increase quite substantially, and we are continuing to build more awareness of the customer. We, for example, have started doing a very simple initiative. As you know, our penetration today on the AirAsia base is about 11 to 12%. We've started in March this year, reminding customers 5 days before they travel, and in April end this year, we started reminding customers 1 day before they travel, and we are seeing an additional take-up, that is a take-up on that base, between 2 to 4.5%. So what that tells you is around 2 to 4.5% of those 88% of customers who are not buying travel insurance are buying travel insurance after our reminder. So that's something very interesting that's coming true as well. Okay, moving on. In terms of our first quarter combined ratio, we have, consistent with what we have communicated earlier, our net commission ratio and net claims ratio will increase. Why? Because we don't have any more commercial insurance numbers coming through. Our claims ratio, while it has kind of stabilized in our view, as travel premium comes back, we expect it to stabilize even further. Our ME ratio has improved significantly. It's very important to note that our claims ratio at 41% is significantly lower than the industry average, for the record. And our ME ratio is the fourth quarter where it's outpacing expense growth. It's outpacing premium. So basically what that means is premium is growing faster than expenses for the fourth quarter. We are progressing quite well on the tech strategy. We are noticing that, we have just launched our B2B travel tech. So I'll give you an example of what is travel tech. I've explained this before, but I'm going to explain it again. In the Middle East, we have a dominating position in travel tech. I'll give you an example. I was in Doha on Sunday and Monday this week. 170 of the 178 travel agents, registered travel agents in Qatar, use Tune Protect's travel tech, distributing a local insurance company who then reinsure back into us as well. That's what we've been able to do in many of the Middle East countries, and that's why the travel insurance premium there came true. Now, we are trying to do the same in this part of the world. We've launched the travel tech in Malaysia in March. We've launched the travel tech in May in Thailand. And we will be launching it, as I mentioned before, in Philippines, Indonesia, and Cambodia at different stages. It's a one-stop platform, and this is something we are dialing up quite a bit. We've also yesterday, as you know, launched our SME B2C proposition for both GI as well as Life. I will not steal the thunder from Jubin and Shuling to explain what that is. We've launched our distributor system, which is a totally digital system, and we are progressing on our core system implementations as well as we speak. Vietnam market continues to grow. Last quarter, you remember, it was significant growth of 20 million over last year's almost zero, and this quarter again over almost zero, it's about 6.8 million. We are in last phases of testing for a very large travel insurance program with another airline. We are hoping to announce it in the next couple of weeks, if not month. Fingers crossed. And we continue to explore new partners in that part of the world. We are expecting more launches on the mobile app side. We are having massive campaigns to drive, the adoption of mobile app. We are also having a lot of focus on adoption of mobile app. So in terms of new features, in terms of new propositions, in terms of ability for customer to claim service, etc., we are continuing to dial up, how we build the mobile app. We are strengthening our Tune Protect brand and presence. You would have seen us in several areas. Our Raya video was rated as one of the must-watch. So both in Malaysia and Thailand, we've been dialing it up. Our first quarter, we did not spend any amount as close as this amount. We had a PR value of 22.4 million. We probably spent less than, $500,000. So that kind of tells you how much mind space we are getting. Our engagement rates on TikTok is 1,000+%. So that's the kind of name we are creating. I'll hand it over to Jubin now to talk about customer NPS and what he's doing.
Thank you, Rohit. Hi, good evening, everyone. So on NPS and some of the initiatives that we are running, if you recall, we came up with the 333 commitment last year. Within 3 minutes, you can buy a policy. Within 3 hours, we will service your request, and within 3 days, we do your claim payout. That got launched last year, and we've seen a lot of traction. So if you recall, last year we launched motor claims, less than 3,000 were auto-approved within the 333 timeline. This year, we've also added fire products. So any fire product claim which is less than 5K, we will honor it within the 333 commitment. The claims are all paperless today. Most of them, can be sent through digital channels, so you don't really need to file it physically with us. The payment will be released within 3 working days. So we've seen the turnaround time improve by 21 days to almost 1 day, after launching this initiative, and we build internal capabilities to do that. We also launched a new contact center platform early this year. This platform is basically powered by Amazon Web Services. This has made us a lot more efficient in terms of managing our call records, our call qualities, and also being able to service our customers a lot more efficiently. It's given us good insights into our customer behavior and why they call us, along with giving great customer experience as well. Our renewal notice, Rohit mentioned about some of the email notification we've been sending out to our customers. We've also started sending them timely renewal reminders and allowing them direct renewal via the website as well. This is part of our effort to increase our cross-sell ratio and our renewal ratio, which we've seen, the indicators have gone up in the past 6 months. Our NPS scores last year were quite healthy. As of December, we were at plus 39%, which is very close to the global industry average that you see. Also, if we compare it with some of the insurers that we've seen in the market, we're better off. So we continue to monitor this and continue to improve on these scores. We recently launched the transaction NPS, which was launched this year. On the claim side, we have really seen, especially with the 333 initiative, our transaction NPS has shown 42%. The purchase journey and the customer experience is something which is very new, so we're trying to improve on that. So these are scores which are baseline scores, but as the way we did it with customer and partner NPS, we're planning to do the same metrics and tracking for transaction NPS as well and improve the scores. Our partner NPS scores have been very healthy and have been much better than the industry average. It's also part of our effort to make sure that all our partners, whether it is the traditional ones as well as the digital partners that we onboard, go through a very fast onboarding journey and a seamless journey, which gives them the ability to go live with us really, really fast. Thank you. So I think that's about it on the NPS.
Thank you, Jubin.
Back to you, Rohit.
The customer tracking, I think, is very, very important to see these numbers. We had 1 million unique active customer count in one quarter 2022, and we're at 1.82 million. It's so important to look at this number. You might look at NWP being down, but you need to look at, and our earned premium is up 29%. You need to look at this number relatively. Our number of customers is up more than 80%. Our policy per customer is also starting to improve after it dropped in first quarter last year. Our product per customer is starting to come back up, and our customer vintage value has been the highest, which means a customer stays with us for up to 6 years. Our average premium is dropping. That's why you might see some of these trends. The reason is, as we go more bite size, obviously our premium will drop, and I think I've been educating all of you about that I expect my average premium to stabilize at around this range between 180 to 220. But we expect us to acquire more customers. Now we can promote to those customers, we can cross-sell, upsell, renewal reminders, and a host of things we do as we get more access to customer data. And that is precisely what insurtechs and large e-commerce organizations do. Our NPS has improved significantly, as I mentioned before. We have moved from +5 to +26. We are hiring more and more younger people. Almost 41% of our new hire is Gen Z, which tells you, A, they're younger, B, they're definitely not as expensive as experienced people, and C, we're building an organization which is ready to service the kind of customer we want to we want to acquire. We're doing a lot of industry engagement, college engagements, and so on and so forth. I'm going to hand it over to Afrol for the ESG bit.
Right. Thank you, Rohit. As we know that ESG is something which is very important, gaining traction among analysts, which is why for Team Protect Group, we are working together with ESG World. We've came up with ESG Insights, and this can be accessed via our website. You just need to go to teamprotect.com, head over to Investor Relations, and you will see the tab for ESG Insights. So what ESG Insights provides is a central platform for you to access all our ESG data. And the beauty of this, I know we are inundated with the ABC's soup of frameworks, right? So the likes of your TCFD, GRI, and also the various frameworks from the different asset managers. We have that, you can just select which framework you want and what are the keywords that you're looking for, and voila, the data will just appear for you, which you can just download via Excel or even PDF. So we hope this will make it easier for you to access to our sustainability and ESG data, such as emissions and so forth. And hopefully that will ease your research on this. Thank you very much.
Thank you. Okay, I'm going to hand over to Chuling to talk about our exciting new proposition from the life business.
Hello, good evening everyone. So I'm just going to share a bit on Tune Protect Life, where we came about, where we were born or we were given birth to in January this year. So since obtaining the sandbox approval and actually entering the sandbox, we launched an SME proposition, SME Easy. And yesterday, as Rohit mentioned earlier, yesterday we launched the online version, the B2C version. And what this basically means is that employers, business owners, entrepreneurs, they can actually buy our SME product, which is an employee benefit scheme that covers life insurance as well as medical insurance. And when I say medical insurance, I mean inpatient hospitalization coverage for their employees online. And it's really end-to-end, right? From onboarding right up to you pay. So it's the first in market for an SME proposition for employee benefits. What's so special about SME Easy? Well, many, but I'll just go with the key propositions. It comes with a 3-year fixed premium medical product. When I say fixed premium, I mean that for the 3 years that you take up this product, you pay the same premium. So you don't actually have to worry about escalating medical costs, inflation, medical inflation at 12%. You don't have that in your product, you just pay a fixed premium for that. It's very budget-based. So when I say budget-based, it means that employers or business owners just go by their budget. They key in into the platform. If I have a 500 ringgit budget, the platform will actually recommend a product that suits their 500 ringgit. So it goes with your budget, not selling you a product that doesn't fit your budget. And of course, the third point is that it's about wellness. So the product comes with a wellness element, and it's all related to the health and good well-being of the employee, with the intention that with improved health and lifestyle, the employee will then contribute to better productivity for the company as well. So that's in gist what SME Easy is about, and we are very excited to see how it's going to pan out in the next few weeks. Thanks.
Chuling, I think one of the questions the media asked yesterday, as well as I think investors would like to know, is how do you measure success? Do you want to talk about it?
So to us, when we put up this product, we know that in the workforce, there's about 7 million employees who work for SMEs, and many SMEs do not actually cover their employees for medical benefits. So the success factor to us is new takers, right? New buyers. How many SMEs that purchase SME Easy are actually first-time buyers, and that's the success factor to us. Then we know that we are actually penetrating and serving a untapped space.
Excellent answer. Exciting. Okay, I'm going to hand over to How. Obviously, I'm sure a lot of you want to hear about our numbers. and Hao is going to take you through the numbers.
Okay, I think on this slide, basically just talking about MFRS 17's adoptions. As everyone is aware, that our officials or statutory reporting have effectively changed to MFRS 17, which I think in the subsequent slide I'll also be sharing with you what kind of impact basically to our bottom line. And for this particular quarter's reporting to Analyst deck, we are still maintaining it at, based on MFRS 4, based on the request of what we actually compile from most of the analysts that of their preference. As basically analysts, I presume that are more ready, I think, in interpreting 17s, then we are definitely more than happy, I think, to switch over to 17s. Meanwhile, what we are doing now is more giving both set of this information, MFRS 4 as well as 17s, for the ease of the analysts, I think, in doing your analysis. If you go to the second page, yeah. Okay, I think a quick overview on the financial performance. Basically, we have seen quite a significant growth in our NWP on our preferred segment, which is Air Asia Travel, Motor, and Health. However, I think you'll notice NWP still actually have declined about 7.3 because you have not fully offset the impacts of a discontinuation of Da Nang PA, as well as basically discontinuation of Air Arabia product bundle. I think that what happened last year. It was actually stopped actually 31st March 2022. We do have a very big upside first Q 2022. However, our net earned premiums have grown significantly by about almost 30%. That was actually a flow through as well, I think, from our last year's NWP to Q1 this year. Underwriting result basically has increased about 8.7 percentage point. That is actually in line with post MCO normalizations of motor loss ratio in this quarter versus year-on-year versus first quarter 2022. It was actually, even though it has actually shown an improvement from Q4, but actually it's still not enough actually to match what we actually experienced in first quarter 2022, where we have a very good claims experience, I think, from motor due to partially due to the MCO effect. On the investment side, we recorded about 10.2 million returns versus a loss of 1.7 last year. Mainly, I think, is in line, I think, with the recovery of bond markets, I think, in quarter one this year compared to last year. Also, I think we have actually moved towards more conservative, I think, investment portfolio during the quarter as well, where I think in the subsequent slide I will touch on approximately like 75% of portfolio now are more on money market. Share of results, I think that mainly representing Protect Thailand, I think you will observe a significant improvement, I think from 2.4 million loss to a marginal 100,000. Those are pretty much aligned with the improvement in the whole COVID situations in Thailand. And we also actually discontinue, I think, the Thailand local COVID products, I think, since last year. So you will observe, you continue to see a recovery from the Thailand's business, maybe in the subsequent few quarters as well. In the last two rows, basically, just to give you a quick overview of how MFRS 4 and 17 basically are impacting our result. You'll notice 1Q 2022, basically, our result basically will improve, I think, approximately 900,000. That is mainly because of we actually have a big growth, I think, in 1Q22 compared to the preceding quarters. So this is in line pretty much with the discounting effect that was introduced under the new accounting standards. 1Q23, our difference is basically quite marginal by about 200,000, which is pretty much, I think, just to demonstrate that for general insurance companies like us, basically that we don't do long-term policies, the impact to us generally are expected to be fairly small relative to, of course, the life insurance business. If I can go to the next page. Okay, this basically show you the portfolio. I think our portfolio now basically is approximately 74% basically on money market, with the remaining, I think, pretty much, I think, on fixed income. We have also exited our equity portfolio, I think, recently, I think early of this month. So now the portfolio is pretty much 75-25 between, I think, a split between money market and fixed income funds. Next one, anything else?
Nope.
Okay.
Okay, thanks, Hal. Thanks a lot. So I think the key message also is we actually are the only insurtech on this slide, and I repeat, a lot of these glorified names that a lot of investors like, we're the only insurer to report 2 back-to-back quarters of profit. Yeah, these guys are loss-making, and our price to book, unfortunately, is significantly lower than what Lemonade and Policy Bazaar. Root, of course, as you all know, is going through a lot of challenges. My key messages to all of you would be the following. The first, we have always said 2023 is our focus, and our 2022 remains our focus. Our commitment remains that our underwriting profitability will improve as the year progresses. We are seeing that happening with the loss ratios improving on the motor side. But obviously Q1 last year, as you all know, was COVID time, so motor loss ratio is a different game. AirAsia business is up 3 times over last year. But of course, as the capacity increases, because as you know, their capacity is not yet there, which they are expecting by June, July, from what I had read from the press, like all of you from Tan Sri Tony Fernandez. Obviously, that we expect to help us as well. We have gone live with several new partners. The ones that I mentioned, those have started producing in April, May, and so on and so forth. So those would obviously produce over a period of time. And we are also expecting to go live with a large airline in the next couple of weeks. On our side, the NEP has grown 29%. Our expense ratio has improved. Our investment returns are much more stable. Our number of customers has improved by 80%. And finally, the TPT COVID claims have completely trailed off. I think hereafter we're not even going to report it. And that's why, as you can see from the numbers, TPT claims are much lower. The last message is, while the profit is pretty strong at 3.4 million, it could have been even better if we as an organization did not decide to reinvest in the business. If you look at the first quarter, there is about 5 million which has gone into 3 different projects, which is TPL, which is our life business, white label, and also our hydro and core project that we are doing for TPM, which again we could have decided we don't want to do it. The hydro and core project, obviously we're talking about another 12 to 18 months legway. And white label, we're looking at about a year from now for it to turn positive. So what I'm trying to say is the profits could have been even better, could have been double, if not even more. But obviously it's a planned investment that we have, which you're all aware, which we are doing for the future of the organization. Having said all of that, I think it's been a very interesting quarter for us, and we look forward to the future quarter. Thank you so much.
Thanks, Rohit. We're going to move on to Q&A. Please state your